What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, took your votes in the chat. If you're not in the chat, hit us up, discord.gg/PBWCM_SG. That's right. Join us in the chat. Unless you're a neo-Nazi, then don't join us in the chat. We've been having some issues. I want to apologize to everybody because we were getting these maniacs coming into the chat room posting all sorts of foul stuff. So they quickly get booted. We've booted 11 of them. It's probably the same guy 11 times. We got a bot watching the room to try and keep it clean. So that's good. So we got all this going on, and there you go. And now here I am. We've got a bunch of mods. Got a bunch of new mods. Let me turn this down. I got the music bumping here today out of my new Leviathan, Razer Leviathan soundbar. Trevor, Mr. Chumber, how you doing? Welcome. To the noobs out there, if you're not already signed up, shoot me those emails, live.com, so you can get on the distribution list so you know when we're doing these. I try to do them at 1 o'clock Central. Is pretty good. I like that time. I like that time. But we do them different times, and we do different things at different times. So it just matters, you know what's going on. What else did we have? We had some streaming issues last time. Trying to fix it. I'm having just overall issues over here. There was a lot of gremlins in the Matrix yesterday. Today we probably don't have the amount of gremlins. I changed the bit rate here a little bit to try and make it work. But I'm still having some issues, so I think I'm gonna have to yell at Comcast. I think that's what it is. I did my speed test and I was downloading very fast, but my upload speed got choked down a little bit. So this is interesting. This is interesting. Yeah, Jim, absolutely, my friend. You hit it on the head. We've got a little bit of information here. Bing! We've got some information on Tiffany's because we got some information on Signet, right? So the other day, and I'm going to talk about it right now. First of all, I want to thank you guys for coming out. Eric, Jim, Richard, how you doing? How you been? I want to thank everybody for coming out here. And I welcome the questions in the side. If I don't get to it right away, remember, there's a little bit of a delay, okay? So it takes about 30 seconds from you guys saying something, or me saying something, rather, to you guys seeing it. So there's that little buffer, that little delay. So I apologize for that. But you just throw it out there, and I'll get to it. But yes, similarities. We're going to talk about this a little bit. That's a very good point. First, let's kick things off like I always do. And that's using the price, consensus, and EPS surprise chart here on Zax.com. This is my favorite tool. Tracy, how you doing? The red line correspond. Red line? What do you, red line? I got Chicago on a brain. Thinking about the red line, the train. Or maybe there was a red line in front of me. The black line corresponds to the right y-axis, which is price. It's the stock price. Little red arrows are earnings misses, so there have been a few disappointments from Tiffany's, something you don't say often. And then the multicolored lines represent the evolution of our Zax consensus estimates over time. And here you can see, even if you go ahead and smush your eye together and then kind of look at the screen, and you can see that it kind of moves up, moves up, moves down, moves up. Oh, Jason, thanks for that. Thank you. I try. Is it the jagged edge that put it over the top? I think it is. Maybe I should start showing my ugly mug here more. Nah, nobody wants to see that. Okay, so the evolution of this Zax consensus estimate over time. So this is basically the poll that we take of all those analysts out there. How much money do they think Tiffany's is going to make? That corresponds to the left y-axis here. But you can see over time, as these estimates start to come down, inevitably the stock price follows it down. And you see this 1,000 times. And this is why Zax is awesome, right? because it uses these earnings estimates to help predict the price. So what you can do is you can use deviations to come up with overbought, oversold for yourself, right? So what do I mean by that? So look here. Stock's all the way up here, and then you see these estimates start to creep down, right? Then you go, oh, maybe this stock is a little overvalued up there, right? And then when the trough starts to happen, so you see things start to turn around here, and the stock starts to creep up. I talked about this the other day. This sort of, when you go bottom hunting, right? When you're looking for the bottom on a stock, because there's lots of stocks like this, lots of retail names. They tell you, be careful, don't try and catch a falling knife, right? You don't want to be Stubbs McGee. That falling knife is the stock price coming down as these estimates are coming down. Wait till you're digging through the rubble and you start to see a trough in earnings, okay? Then you could go ahead and buy with no remorse. It takes a lot longer for earnings trends to develop than it does price trends. Earnings trends are stickier and they push the price. So if you're looking for the real indicator in this market, this is where it is. So now look at what's happened. This is interesting to me. You get this sort of bold recovery here, and then these numbers have stagnated. And as the numbers have stagnated, so has the stock price, resulting in a consolidation, choppy trading from 85 to 95. And we're going to see this in the chart, but looky here. We got a beat, we got another beat, and we're starting to get this little wedge. Okay, that wasn't good. We're the Trivial Pursuit players over there. Brown for a wedge. So it's starting to wedge, although this is per magenta. I think this is magenta. Would you agree? Magenta? Magenta? It's magenta. I'm pretty sure. All right. Consolidation. Wedging. Buying pressure. But this is basically sideways, okay? So what you got to decide is, where do we think these estimates are likely to go in the future? Top 29% of our industry rank, that's the retail jewelry. BMO, that's before the market opens on the 29th. Where am I? I'm in South Florida. It's 2017. What date? What date? Today's 22nd, so the 29th is next Wednesday. So before the bell next Wednesday. So you got the rest of the day today. I know there's not much. You have a shortened session on Friday, Monday, and Tuesday. So you have a lot of time. So if you're thinking about putting any options trades on, you can wait, right? You can adjust some of the parameters and get into there. And if you're a longer term trader, let's see if we can, or long term investor, let's see if we can offer up some insight here on whether or not you should own Tiffany's into earnings. Looky here. Did I remember? Hang on. Okay, good. Revenues. Not a lot of revenue growth. 1.24% for the current quarter. Next quarter looks like 2.96. Current year, 2%. And next year, 3.57. So very moderate growth, but growth nonetheless, but very small. Whole lot of nada going on over here, right? But translate that over to the EPS side. You're looking for 79 bips for the current quarter. Next quarter, it's going to be better. Better! 6.43. Current year, 5.33. Next year, accelerating to 9.14. Now, here's the part. This is why this is his Zacks rank number 3. Because amongst all of these analysts, nobody had the chutzpah to increase or decrease or do anything. Basically, they've been on vacation for the last 60 days. Haven't made any movements. Haven't moved the needle at all on Tiffany's. They're just kind of sitting back, relaxing, and collecting checks. 77 cents, it's been 77 cents. $1.54, it's been $1.54. $3.94, one estimate's fallen off. It's gone to $3.95, and then $4.30 up to $4.30. Nothing. Nothing. Just nothing. Ain't nothing doing. There's nothing happening here. The most recent came in at 75 cents. And now if you look at surprise history, small. 4 cents to the upside, 4 cents to the upside, 8 cents, 9 cents, 6 cents. Not a 6 cents or your 6 cents, but 6. Oh, goodness. All right. Let's look at Tiffany's. Oh, okay. I guess we'll do valuation. The valuation's already here, so let's pop this up. Looky here. Zach's sub-industry. So that's everybody else that's in this industry here. Okay? $1.14 is your typical price of sales within the industry. Tiffany's is up at 2.76. Interesting. I want to compare. Jim, you hit it on the head, my friend. Let's look at Signet Jewelers. Now, the people at Tiffany would be furious if they found out we were comparing them to Signet Jewelers, okay? Let's just put that out there. This is Tiffany's, okay? Where was I saying? Somebody was talking about being the Tiffany's. There was an analyst that said that Tesla is the Tiffany's of car companies, I think. Somebody said something like that. There he goes talking about Tesla again. Look at this, though. Sort of this move where deflates and Tiffany's have been inflating. That's price to sales. And we know where the market's a little over 3, right? 3 times price to sales. Oh, Maya, thanks. Well, thank you. I'm glad you love it. I'm glad you like it. I'm glad I'm mildly entertaining, and hopefully you can learn some things or at least have a couple laughs. That's all that really matters. Thank you so much. All right, so compared to the overall market, S&P's up 3.1. We're at 276. Earnings. I want to look at the earnings side of things. Look at forward 12. Forward 12. That was the huge problem. That was a huge problem, Jim. SIG was... They were transitioning their credit portfolio and outsourcing it. And they said they had bugs outsourcing their credit thing, okay? Now here's the other thing about Tiffany's. I bet you the standard, the credit overall at Tiffany's is better than the credit situation you're seeing at Signet. I'm just so mad at SIG right now, because that hurt a lot of people. Matrix had it or has it? I'd have to look in options trader, but I think he always puts spread, so at least his short end helped a little bit. 18 times for the S&P. We're up at 22 times for Tiffany's, so a little rich. A little rich. Yeah, they lowered guidance because of the credit concerns. I mean, that was a big chunk of it. Let's look at Signet real quick, right? Look at this, just deterioration. But this is the reason, though, and I'll show you guys why. Look at the EPS. Contraction. Nasty contraction. Oh, were you getting Tiffany's card? Were you popping the question, Jim? Were you popping a question? Who are you trying to impress? Ah, the wife did it. Yeah, see. Well, then it kind of worked, though, right? We're going down a slippery slope here, Jim. This is good news, though. So, when you're looking for, okay, how am I going to justify a PE at 22? It's got to come from some growth. And remember, we're looking at forward PE at 22, not a trailing 12. We were looking at forward. So what's going to justify that 22? You got to have some growth. And here, There you go. I used to introduce my girlfriends as my future ex-wife. They didn't like that too much. They didn't get the joke. It's like, well. So this quarter is kind of a, I don't know if you want to call it a throwaway, but there's not going to be much growth this quarter, and the next quarter you're going to get some promises, okay? Now, as Jim brought up, this market's already kind of looking at jewelers going, maybe they're not so hot over there. I don't know. A little bit of growth and then more growth. I always like to look not just at this quarter. I like to look at this quarter, right? Go a quarter out, because that's where the guidance is going to come, and that's what the market is going to react to most likely. So here's the growth. I like this. One thing I like this chart. EPS trailing 12 months here is what they're showing us. Growth though. Is this growth? This should be showing growth for the trailing 12. All right. How has this reacted to earnings? And July quarter, not much of a reaction. April quarter, got a little bit of a reaction, negative 7.86% to the downside. Remember, this is 2 days before to 2 days after. Then you got a 4%, a 5%, a 6%, negative 2. So it moves a little bit. Here's a 10. Let's take a look at if we can see what kind of drift. Or do we get drift? First of all, right off the bat, this is a choppy. This is just a choppy stock, right? All throughout. Look at it. It's jagged. Jagged. Jagged, 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 jaggedness. That's a good question. Do you value growth in revenue numbers more than EPS growth? Yes, I do. And you should too. If you're in a growth stock, right? So if your revenue growth is stagnant and your EPS is on the move to the upside, that means your business is getting more efficient, right? Because you're doing more with less. Or you're doing a little financial engineering. So that's why you got to look at both. That's why you got to look at both, okay? They don't tell the whole story by themselves. Choppiness. Just chop city. Just chop. Lots and lots of chop. Wild Bill Phillips in the building, ladies and gentlemen. I want to look at the stock chart. The music is super sexy right now, just so you know. I know there's nothing that gets your motor going more than diamonds and listening to 112. But this is about stocks. All right. A couple things I want to do. First, I want to draw a big fib. Big fib from here all the way to there, and then there you go. So that's a good one. I want to use that. The other thing, we're going to draw lines all over the place. We got our Thug Pink. You know what the Thug Pink is. Thug Pink is our 200-day moving average. And now you can see that the stock, this is an interesting little rope-a-dope here. So it gets up to here, right? Then it comes down to what was previous support level, also happened to be the 23.6. Forces down. You know what this was? Stop grabber. Intraday stop grabber. All the longs who had stops down here got 8 up. They all got 8 up there. And then the stock starts to come back up. Challenges highs. Challenges highs. If you notice, the last time it challenged a high and it came down, you see this? Look at these big days. These huge intraday swings. They got out again. So I bet you what happened. This is rich. This is good. Look at this. Intraday, they try and push it above the 50-day. Nope. Try and push it below the 200-day. Nope. Leave it right on there. Then they try another rope-a-dope. They try that stop grabber again. Try to push this thing down. Try to get your goad. Didn't work again. And now, we can bump Aaliyah a little louder here. You got another situation back down to the 50-day or 200-day. Now, the 50-day and the 200-day are very close, right? You know what else is happening? I don't even need to draw them. Here, I can tell this is what the Bollinger Bands are going to look like. Probably nothing like that. Here, let's put them. Let's see how accurate I am. Let's do it. And go. Ah, I was wrong. Hey, it wasn't too bad, though. That's pretty good. Good look, I drew a dip. I drew that. I was just off. This one had to go lower. Okay. Hey, that's pretty darn good. That's pretty darn good. Anyway, so as the Bollinger Bands get tight, so here you see here, that implies that a move is likely to happen in one direction or the other. Boom. See that? As they tighten, the likelihood of a move out of them increases. So not only do you have a tightening of the bands that has been taking place here, but you also have the 200-day and the 50-day starting to get real close to each other. And there's another one. There's another one. Wedge. The wedge. It's wedging up. You could argue from here. That looks more impressive. Wedge here. Pressure there. Market point of control. Almost exactly where the stock is. Commodity channel index was oversold, crossed over the zero line. That's on a buy signal. I'm going to pull off this Bollinger Band real quick because it's making things a little noisy. And let's pull the CMF down on the bottom. Should not come as a surprise. What you guys will find is that when you have, and I was just talking to, I think it was Eric via email, learning about that sort of market profile. That's on like intraday stuff, but overall the volume at price indicator here shows you where the trading has been. So when you have a lot of trading kind of seesawing back and forth around a centered level like this, it's going to translate to a CMF that's right near the zero line. Does that make sense to you all? Because the CMF is basically trying to show you buying power versus selling power, okay? So when this is very low, there's a lot of selling power in the market. People have been selling on down days. And then when it's up above here, the people have been buying on up days, right? And as this sort of seesaws back and forth for a little bit, it kind of tells you that the market's probably near that level where all of this volume has been going out because it's canceled itself out. Being this is sort of like a cumulative total of the volume up versus volume down. That's a very, before the math guys start screaming about it, I know it's a broad stroke. It's not exactly how, but that's a decent definition of the CMF, so stop. Okay. I keep yelling at these imaginary math guys that are out there when it's actually me. So it's my inner math nerd yelling at the other half of the math nerd. Dzień dobry, Ted, jak się masz? I'll write you a note. It's okay. You could be late today. All right. Now, what does it all mean? Well, it means that I think that this Tiffany's is about to make a move. It's about to make a move, my friends. And our Zach's analysis has told us that we're not really sure where that move's going to go, right? Because it's kind of sideways. Sideways. So we can be kind of neutral on this. We can. It is. We can be neutral. That's fine. Do the side-by-side view so we can take a look at this. 94.29. Really? Really? You gotta be kidding me. Hang on. Let me pull these up. 94.29. There we go. You guys see why I was so suspicious of that? Yeah, I was suspicious. Arise my suspicions. All right, take a look at this. Dreading the death cross. That's right. The call. 260 by 28. Let's go to the December expiration here. $94.27. I'm back. Yeah, we're getting some buffering, guys. You know, if it ain't one thing, it's the other. I'm blaming Comcast on this because my last speed test I did didn't look so good. The download speeds are good, but my upload speed, for whatever stupid reason, is garbage. Can you hear me now? That's the important part, because I am back. Okay, so... Oh, Brian Boland's here! Wow. What's happening? We were all talking about how awesome you were, and how happy we are that your picture here doesn't include your face. A net neutrality preview, absolutely, Jim. I'm telling you, Jim, they don't like me. They want to charge me extra to upload stuff to YouTube. I'm telling you, that's probably what it is, man. Try to stick me for my papers. Okay, so no problem in Sunny Isles. I know. No problems in Sunny Isles. It's totally true, man. I didn't have any issues in Sunny Isles. Well, I did. I had other issues. There's always something, man. There's always something. Okay, let's get back to the task at hand here. Task at hand is Tiffany's. So we do have a wedging up that's happening, right? Which implies upside. It does. It implies upside, guys. With it right here near this 200-day and everything, this implies upside, okay? But I could easily see the bottom falling out of this. And if it does, if you thought Signet was bad, it could be even worse, okay? So maybe people are just upgrading their game, right? They're like, no, I got enough money for Tiffany's. I'm not going to those Signets. December expiration, okay? I'll go back to the other one. So I think it moves. I think it flat out hauls. I think the stock could go, okay? So if you think it could go, what you do is you take a look at the market pricing in $5.50. So the market basically saying it's going to what, 99? 100 almost. Market says it's going to 100. I'm not even gonna have to do this. Let's do the 94.50. Okay, I'm gonna show you this, and then the 100. We're not even gonna do the 100. You guys know I'm a big fan of the halvesy. So what if you just did half of that move? What if you looked at the 97s? Now this looks awful wide. So maybe the 96.50 is better. Let's look at that. 94.50, 96.50. No, I'm not gonna like that one. Pinch her in. No, I already did pinch in. 94.50 and 96.50. I'm just gonna show you this, and I'm gonna show you why I made that noise. Because I'm doing too much stuff in my head. I shouldn't be doing that. I should be telling you guys about it. So the 94.50 to go long there. This is in the December 15th expiration. It's going to cost you $333. Simultaneously selling the 96.50. You're going to get back 223. So your net outlay on this is going to be 110. But the difference in the strike prices is only $2 minus that 110. That means you're only going to make 90 cents on 110. I don't like it. I don't like it. If I'm going to roll the dice on a debit spread, I want to be paid for it, okay? I want to be compensated. Meaning if it hits, I want to make money. But then again, even though we're only moving $2 here, right? Or we are moving $2, which sounds like a lot. It's not a lot when you're talking about a stock that's trading at $94. So maybe our halvesy just plain doesn't work. So what if you did a 94, 98.50? This looks interesting. And I'm going to go back to where 98.50 is in the chart, but first, shall we? 94.50 is 333. Simultaneously selling the 98.50, you're going to get back 167 for $1.66. The difference in the strike price is a $4 holler. Minus that 166 means you can make 234 on 166. Well, 167. 140% is what you can make on this bad boy. Now that is much more appealing. And what you would need is shares of Tiffany would have to close at or above 98.50 at expiration. Remember, my friends, tis the season, right? So we're going to be guiding for this next season. That's what they're going to be talking about, how this holiday season is looking up. So the bull, debit, long, December 15th, 94.50, 98.50, call spread for a 166. Was it 66 or 67? Well, it's 66. Net debit. There you go. Another way to be a bull for the more conservative types. Let's pull up this chart. So, Dave, are you crazy? You think it's going to go to new highs? That's what you got to think. That a good report with the support here, support here, support here, all along the way. Somebody has been adding all along the way here. Pull up a regular volume study. Look at this day. Somebody threw some serious muscle behind a punch there. Okay? Somebody did. I don't know who. Probably an earnings day, right? What was that, late May? Oh, every once in a while the real dirty song comes on and I gotta press pause, I gotta skip it. Alright, there we go. Now we're much more G-rated. So there you go. So big spike in volume on this day helps to absorb that downside pressure. And then the market creeps back. Yeah, a lot of selling, Paulin. A lot of selling that day. But a lot of buying also. So intraday, somebody came in and they stomached it and then pushed it higher, right? They absorbed it. And then here on these days, above average volume days, but nothing super spectacular, which is just relates to the kind of ho-hum that we're in, right? Okay. I got so many charts. I got lines on charts. You want some lines on charts? I gotcha. You know what I think is going to work also? I think going along the straddle and Tiffany's is going to pay off. I think it moves more than 5% in either direction. I really do. And due to Tiffany's choppy nature, I think you hold one, profit one end, and go out on the other. So this is what I'm going to say. Another option. I'm going to say, guys, I'm just going to go crazy here. I'm just going to lose it. I think if you buying the straddle is actually going to work. Look at this. Trade that pays. That's right. I'm not even going to wait and give you this. I think the trade that pays is long the 94.50 straddle. December 1st expiration. Yeah, we were talking about SIG before, Bolin. When you were ignoring us. So we think that I think this moves more. I think this moves more. I don't know if people are going on Amazon and buying Tiffany's. I mean, no. You gotta like see it and feel it and touch it and look at it, and or you get in trouble. If a lot of guys are getting in trouble with their girlfriends, I think Tiffany's is in order. What did I say the At the Money Strangle was, or straddle? What was it? 272 plus 282, 83, 280. Let's call that 554. So let's say the straddle. So the straddle for, let's just call it 560. Now that's expensive, guys, and I totally understand that. Now some of you would be like, "Nah, I'm not trying to do that. I'm not trying to do that." You got to be real careful, because I know some of you are maybe thinking, "Well, I could just do a spread in either direction." You got to be careful, because you got to make sure it's going to move enough to make up for the money that you're paying on this end, right? And you're adding multiple legs, so it's going to get a little hairy. The straddle's at 94.50, Jim. Basically saying you don't, at 94.50, yeah, you don't care where it goes, you just think it goes. So here, look at this. I want to walk you guys through this real quick while I got your attention. Let's say, what if you went long a put spread here and long a call spread here, okay? Right? So essentially what you're going to do is $4 is going to be the most that you can make, because if you make $4 here, you're going to lose your other stuff. You can make $4 here, but you can't win on both, right? So the opposite of the strangle. So now on this end, what you do is you take that 272 to be long this call, and then you can subtract whatever you'd sell this 98.50 call for. This is a pretty wide. This is a 36 cents, so you're talking 18. So let's say 112 potentially, right? So this would cost you 160 for the call spread, and then a put spread. What did I say before? I called that 282. 282 on this end. That's another wide one, 31 cents. So we can also call that 16. 133. Let's call it 132, just to make my math easy. So you get 150. It's not worth it. I don't think it's worth it. Right? So then your total outlay here is $310, and you can potentially make $4. No. If you're gonna do it, you just do it. You just buy each side and hope the thing pops or drops. Okay? Now here's the bad news with a trade like this. This implied volatility is gonna go kaput after the earnings, right? Because that's what the whole event is. We're all like, oh yeah, something's gonna happen. So if the stock does nothing, you're gonna lose. You need the stock to move, and that's what this trade that pays. Yeah, if you're gonna do it, just do it. That's right. Go big or go home. Don't try to make it too cute. And I'm sure there's a way to make it cuter, right? On that spread I was doing, I could go further out here, I can go further out there, I can go $6 out, $6 out that way. There's ways to massage it, but I say you just do it, okay? And then you can manage it. You're not going to be able to manage it much. They're going to report before the bell on the 29th, so you're going to have the 29th, the 30th, and the 1st. You're only going to have 3 trading days after earnings for something to happen, okay? I would wait. Now everybody, do not, if you're looking to do the straddle, don't do it until the day before. So whatever this is going to be on the 28th of November, the strategy would be you wait until 11:28, right? at 2 o'clock Central. Eat some brisket. Do some lunges to work off the brisket. And then whatever Tiffany's is trading at, okay? So let's say that next week Tiffany's is trading at 90. Well, then you're still going to do at the money call, at the money put at 90, not at 94. Wherever it's at. Wherever it's at. That's where you do it, okay? It does not benefit you to put this on before earnings in the least bit. There's no benefit. So just wait. Just wait. Wait for a little bit of time value to erode, and then do it the day of. Okay? That's my trade that pays. Okay? That's what I think. I think it really moves following earnings. What do you guys think? Do you like it? I know Bolin likes it. Bolin likes the brisket too. Bolin, because of your brisket nonsense, because I'm so jealous, I went to Arby's and they had this sandwich that was brisket, like chicken and pork. It was like 3 kinds. Oh man, wedding ring at Tiffany's? No, there will be no wedding ring at Tiffany's. When I finally do decide to throw in the towel on happiness, I'm just kidding. Oh man, oh goodness, oh, whew. It's a good thing she doesn't watch these videos. Oh man, nah, I'm just kidding. But when the time comes, it'll come. There you go. How appropriate. Wow. Take my money, my house, and my car. Jodeci is serenading us. That's my trade that pays. No, she doesn't. She doesn't watch. There you go. Thank you, Lorraine. Lorraine, you hear me? Oh man, I don't know. No, it's gonna be fantastic, right? It's just frightening. It's terrifying. But there are a lot of things in life that are terrifying. So it's all good. I already know what she wants. She wants a princess cut sapphire. She wants a princess cut sapphire. Ah, here we go. Mr. Williams. It's about to hit $1.45. Do you close out a spread? Let's look at this. So, man, look at that, glorious. This is true. I'm preaching to the choir. You know why divorce is so expensive? Because it's worth it. That's what all my divorce friends tell me. So the question is, should I sell deer here? The answer is no. Because you're only going to get, you can't even get $4 for the spread, right? Can't even, $4 for the spread. You're going to catch some more post-earnings drift, I think. And that 145 call still has a lot of juice. Why am I writing so poorly? 145. The 145 call has still got a lot of time value and implied volatility in it, okay? So I think, what are you guys looking at, like 375? Like where can you even get out of that spread? I don't even think it's that good. So no, you just kind of wait. Time's on your side. You're in the green. You're okay. Okay? You're fine. You don't have to do anything. You can rip it if you want to let her rip and go on to the next one. Upside down 5. How are you guys? How do you do 5? I always put. I'm guilty of pushing my my 5s. No, Jeff, I dropped the bit rate. I dropped the bit rate, so you're wrong. It's not the bit rate. It's not the bit rate. That's how I draw 5s. I can't. It doesn't even feel natural to do it that way. I write strange. I push the pencil. I don't pull it. I've been told that I push instead of pull. That's my sticking his tongue out. It's my angry face. Okay, this is just devolved. All right, guys, that's all I got for you here on Zach's Live Trader. Listen, we're going to be in that chat room. Because it's getting good. And there's... I'm bit right again, Dr. Paul. Hopefully there's no Nazis. Hopefully there's no neo-Nazis in the chat. We've had a problem with neo-Nazis in the chat. And we've been sniffing them out, though. Snuffing them out. One by one. So there's that. And it's coming out on the screen right there. HTTPS discord.gg. And then a P and a B and a W and a C and an M and an S and a G. I hear you, buddy. I hear you, Jeff. It's terrible. It's terrible. I think it's YouTube. I blame YouTube. Let's blame YouTube. Can we blame YouTube? We can blame YouTube all we want. Twitch is coming, Jeff. It's coming. I'm just, I will be in the chat later today, my friends. Have a wonderful Thanksgiving. I hope everybody gets along with their relatives. Email that chat thing. Oh, here we go. Let's do it right here, guys. HTTPS, right? discord.gg/CMSG. There you go. There it is. There's the chat for everybody. It's on Discord. It's fantastic. It's getting better every day. Except for when the neo-Nazi, 12-year-olds go in there and post inappropriate pictures and say all sorts of foul things. But we got them out. We get them out of there. And we've got a bot, and we're working on it. And, yeah, so everybody have a fantastic Thanksgiving. Yeah, talk politics with your family. See how that goes. Just for fun. What else should you do on Thanksgiving? Try not to drink too much. Don't let anybody choke on the bird. Don't burn the pumpkin pie. And Chinese places are open on Thanksgiving. That's true in every city because they don't care. I'm like, whatever, man. Thanksgiving. A lot of places are open on Thanksgiving. It's terrible. The mall's open on Thanksgiving over here. Oh, see, Dr. Paul, bless the less fortunate person. That's why I'm talking to Bolin. That's why let's all be so nice to Brian today. That's why. What else? That's all I got, man. That's it. So thank you guys so much. I'll see you in the chat. Not going to do anything on Friday, so ignore me. Any questions, you know how to get a hold of me. You can shoot me those emails. And I'm just going to rock out to Keith Sweat. So thank you guys so much, and we will see you soon. Have a good one.